The bosses of two of the country's biggest banks are set to face a grilling today when they face a parliamentary committee in Canberra. Brian Hartzer from Westpac and Matt Comyn from Commonwealth Bank are likely to be quizzed on why they are not passing on the latest interest rate cuts in full. Politicians will also demand to know how the banks are changing their culture and their practices in the wake of the Royal Commission.
Joining us live now is Peter Switzer, the founder of the Switzer Report. Look, the banks are really suffering at the moment. I mean, don't feel too sorry for them, of course, Peter, but on the front page of the Fin, you have other bank bosses warning about the lack of confidence. Now you have two bosses before a parliamentary committee. Will that do more to dampen confidence?
Well, it depends what comes out of it, and you kind of think that the parliamentary inquiry today is going to be like another chance to, you remember when we were at school when one person was in trouble and the whole school wanted to get in there and kick him and tease him, and I think boys used to give each other atomic wedgies, but girls used to tease each other until they had eating disorders. I think this is the kind of thing we're going to see in the parliamentary inquiry today, politicians trying to pile into the bankers. And I think it's, in many ways, we've had enough. We've seen what's happened to ANZ's profits. We've seen what's happened to Westpac's. The share price is falling. Just about every Australian in the country that has superannuation is linked to the bank's share price. And I just think in many ways it's gone far enough. And I think it's time that we just said, and by the way, you made the issue around not passing on the interest rate cuts. The fact is we shouldn't be cutting interest rates. They've got to ridiculous levels. Anyone who's trying to save, any retiree who's trying to avoid the stock market and live off term deposits just can't do it. And so it's time, I think, for those politicians, particularly in the government, to start thinking about some fiscal stimulation rather than interest rate cuts.
Well, you've surveyed a bunch of economists, right, Pete? What have they had to tell you about what Josh Frydenberg should do?
Okay, so we heard during the week that Bill Evans from Westpac, and Bill's not the kind of guy who grandstands at all, but he suggested that tax cuts were pretty sensible, and then the CBA came out and said the same thing as well. So I went to a whole bunch of other economists. So Shane Oliver, he said yes. Ryan Felsman from ComSec said yes. Alan Langford from Bankwest said yes. Paul Bloxham from HSBC said yes. Sarah Hutter from BIS Oxford Economics said yes, but there are other things you could do. And Warren Hogan said yes. And John Hewson said, well, probably yes, but there are a lot of other things you could do as well. And he says that the government's scared about losing their budget surplus, but that's probably a lesser issue. You need to stimulate the economy to get economic growth happening, and then wage rises, and that is in the hands of consumers then, who will actually push retail figures up, and then businesses will go to banks and say, hey, can we borrow some money because we've got customers who are buying stuff. This is so obvious.
It sounds so easy.
It is so. Well, look, the thing is this, it takes political guts for the government to say, OK, we'll give up the budget surplus to get the economy growing. And let me tell you this, guys, one of the best politicians when it comes to the economy was John Howard. But when he was Treasurer under Malcolm Fraser, he tried really hard for a budget surplus in the early 90s. And because the economy went basically into recession, what happened was he didn't get a budget surplus, he got a really big budget deficit. And guess what? Paul Keating and Bob Hawke won the election and Labor became the next government. So they really have to be careful here. This is the time to stimulate the economy, not to actually say, I want to protect the budget surplus.
Why are you convinced that the government can't do both, deliver a surplus and stimulate the economy? And I want to ask you about the fiscal stimulus we've seen so far in the form of tax cuts, $7 billion worth. There was a lot of questioning this week about whether that has had enough of an effect on the economy. So all this money is being spent, but it really hasn't pushed any of those levers in the right direction.
Yeah, and it's a good question, and I think a lot of economists are surprised that the tax cuts so far haven't worked. But I guess the bottom line is there are so many negatives out there, and no one from the government is getting on the front foot and saying, look, we are an economy that's growing around 1.7%, and most experts think we go to 2%. 2% is not fast enough, but we'll do more to push this economy to 3%. And I reckon they just need to be far more proactive. I do more to build up the confidence of Australians than the Treasury is doing at the moment. And I think it's absolutely crazy. I'm not being paid to do this. I do it because I think it's a pretty good idea to get people in jobs, spending money, getting shops going, and getting bank profits up, so share prices go up and superannuation goes up. That's a pretty virtuous cycle, I think.
Yeah, but to be fair, I guess they haven't been helped by problems overseas, right? The economic factors that have come from overseas.
Correct, and that's why we have to offset it. As a country and as an economy, we have outperformed the world for a long time. Like, we haven't had a recession here for 29 years. And part of that has been, I think, very sensible leadership, courageous leadership at various times. And it was shown even by Hawke and Keating, then Costello and Howard. And there was the GST was a really bold move. And people think, oh, that was a tax increase. No, there was a whole lot of tax cuts that went with the GST. And I think what we need now is, in a sense, we talk about climate emergencies. There's a bit of an economic emergency on right now, and I think the government has to get on the front foot and say, this is what we're doing to change things. Cutting interest rates is a dumb strategy. Hasn't worked in Europe. They've gone negative, and I just think it's the right time for the government to come up and say, we're in an okay position, and we're going to make it better than okay.
Do not hold your breath, Peter Switzer, I might suggest. Thanks so much for your time.
Well, yeah, my pleasure, my pleasure.